You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating, at least we tend to think so around these parts, Options Insider Radio Network. Reminding you, if you're part of the Secret Club, you can join us at 2 p.m. Central today to go live for all the week's worth of unusual activity that we can cram into an hour or so on the show. A lot of living packed into that show. Options Oddities, of course. If you don't know what I'm talking about, you want to check that out. You want to check out the Pro Q&As. We had an awesome one this week. I guarantee you the one this week will impact you positively in some way, shape, or form down the road. Check it out. Theoptionsinsider.com/pro is the place to go to learn more. Of course, if you're listening after the fact, you have a legion of shows to check out. And if you like what you hear, keep rating and reviewing. It really does help all of you new folks continue to discover all the shows that are cranking out. It's ridiculous how many new platforms continue to pop up and continue to add our stuff. So there are literally new people seeing it all the time. So if you like what you hear, no matter where you're hearing it on legion of platforms out there, keep rating and reviewing. It really does help the new folks discover the content. And of course, keep those questions coming. We do love to hear from all of you guys and gals out there today. And let's see who we're hearing from today. First, joining us from the volatility mecca known as Texas, we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program, sir.
Hey, good to be here. I'm really happy to be here. It's quite the day here. We're getting quite a week of volatility, didn't we?
There's a few things on the docket to talk about this week. Not one of those sleepy weeks. It's not like 2017 where we were scraping, trying to figure out something to talk about for most of the year. No, 2020 and 2021 have been an embarrassment of riches. This week is no disappointment there as well. And also joining us to break down the maelstrom of volatility madness, we are joined in the MIAX hot seat by Mr. Matt McFarland, the derivatives products and biz dev specialist over there at MIAX Futures. Matt, welcome back to Volatility Views, sir.
Thanks, Mark, and looking forward to talking volatility with you this afternoon. It certainly was an interesting week.
It was an interesting week, so let's get to it. Let's dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show we break down what the heck is going on from a Vol perspective out there. And man, there was a lot of it on the tape this week. You know, we kicked off the week just in the teeth of that sell-off. Most of the major indices at one point were down close to, if not over 3%, 2.5%, somewhere in that range. And then a lot of them pared those losses towards the end of the session. Then, of course, we saw some sessions with mixed, and then we saw a rally, of course, on the tape yesterday and a little bit of rally the day before. So we have pretty much erased most of the sell-off we had at the beginning of the week. And also from a vol perspective, by yesterday, we were pretty much back to unched on the week from a vol perspective. We saw vol pop over 8 points across the board on most of the major vol products there on Monday, and we started giving some of that back. By yesterday, we were pretty much back to where we were, and now coming into today's show, we're seeing the markets kind of shrugging to end the week. They were mixed. Now it looks like they're leaning a little bit more, still mixed, but leaning a little bit more slightly to the red. S&P still flirting with up slightly, Dow down slightly, so slightly in the red, and then NASDAQ off about 0.15% on the day. So that means all the vol, though, not waiting to decide what the market's up to today. They're already taking the weekend out here. We had vol coming in. You had another point just right before showtime. We were trading at an 18 handle, 1875, 1850 in VIX cash not that long ago. And coming at the start of the show, we're already down at about a 17 3/4 when we kicked off the show. That puts us down actually 2 points from where we were this time last week. So not only have we just given back all the pop we had earlier this week, but now we're back below where we were at this time last week. Spikes coming into showtime. It was at an 18.5, but they had given up a lot of that right before the showtime, down to about an 18.10 or so. That puts it down almost 2 points, about 1.9 points from where it was this time last week. VVIX back below its frothier levels from earlier this week, 109. That's down about 9 points from where it was this time last week. Mr. Matt, it's been a little while since you've been on, so we'll start with you. We'll get to all the fun futures stuff. I know you guys have been popping off with quite a few volume records over there in the futures. We'll get to that in a second. But before we get there, obviously a lot's been lighting up the tape from a vol perspective. Just this past week, what's been on your radar, sir, as you watched all this vol come rushing in and then rush back out again, sir?
Yeah, I think that's a good recap of the week market. I was fortunate this week to be able to attend an industry volatility event where a lot of volatility managers were on panels speaking, and I think there are a couple of key takeaways that I took from it. At least was one, there was a lot of talk about the volatility risk premium and how elevated the volatility risk premium is today. When we talk about the volatility risk premium, essentially it's, implied versus realized or implied versus historical. People are talking about how rich that is these days and saying the reasons for that richness is really supply and demand factors, that there's limited supply relative to what there has been historically, limited folks that are able and to express a short volatility position, and there's increasing demand for downside protection given the number of uncertainties that are out there in the market. That demand coming from tail risk hedging, that from pension funds that used to be historically would hedge opportunistically, but now it's becoming a permanent fixture within their strategies, as well as just all the other risks that are out there: inflation, debt ceiling issues, the removal of fiscal stimulus, Fed tapering, all of these risks that are out there, and then of course the unknown unknowns. That was a phrase that was articulated many, many times this week, unknown unknowns. So as I heard this type of talk about the volatility risk premium, and then I contrasted that with, what was going on with the price action in the market this week, I don't know that it necessarily coincided because, we had that sell-off on Monday, and then, it spikes intraday on Monday. The spike index got up to 2865. But here it is today. We're with an 18 handle. I think Monday was the largest sell-off we had since May, and back then the spike index went up to 28 and quickly mean reverted down back into the teens again. So this notion of limited supply of vol sellers does not necessarily jive with the price action I'm seeing, and certainly I think we'll as we evaluate the trades later in the show, I think we'll see a decent amount of folks that were willing to express a short volatility position. So that was one interesting aspect. Another interesting aspect was the expectation for volatility in the market. A lot of times on your show, you ask about what our expectations are going to be for implied vol going forward. At this conference, there was a survey of expectations for realized vol in the fourth quarter, and the expectations for realized vol in the fourth quarter from the audience members were quite high. Now that did jive with what we are seeing in the market. If you look at the Spikes futures term structure, it is quite steep. The NOV contract is trading at about 1.6 vol points premium to the OCC contract. So that's really pointing to expectations of market participants for higher volatility going forward. So those were my key takeaways from this industry conference this week, and it was certainly an interesting time to have that conference given the price action we saw in the market this week.
Yeah, definitely a good week to be chatting volatility. Which conference was this? I wasn't aware of it. I've been busy because I haven't been to a lot of in-person conferences or really any since SIBO Risk Management of 2020. So I'm behind on my in-person events. Which event was this?
It was Capstone's Global Volatility Summit. MIAX was a sponsor. It was not in person, however. It was a virtual event. So
okay. That makes more
I was
sense.
Observing on my computer in my home, as everybody else was.
Smart man. You can't get waylaid by the COVID. Someone's got to watch all the futures over there at MIAX, right, Matt? You can't get sidelined for any period of time. As we keep on rolling, Mr. Mark, as we mentioned, a lot to unpack. We could probably almost fill the entire show just with our weekly recap of everything that happened over the course of the past week. So obviously a lot was on your tape. As I mentioned earlier, the vol came rushing in on Monday. And unusual, I chatted about this with the Rock Lobster a little bit yesterday. Usually you have a few minutes to sell that upside if you have calls and things like VIX or spikes, and then it goes away. You had a good chunk of the day on Monday because that sell-off persisted, and then it kind of exacerbated for a bit. Then it finally mitigated at the end of the day. Then, of course, we saw the inevitable vol decline in the later sessions. What was lighting up your tape as the vol was exploding and then eroding, sir?
Yeah, that's just it. We had a heck of a vol day on Monday. Biggest move for the market since, I believe, March. And subsequent rally was a pretty violent couple of days. Yesterday, at one point, we were up almost 70 points, fell back down. But, it's been interesting. We've had really since Monday, VIX has just kind of gone straight down, and it's now back below 18 after being really pretty darn high at the highs of Monday. On the Monday's high was one second here. Yeah, Monday's high for VIX was 28.79, right in line with spikes, and then it's basically just been straight down from there. There's not been a bid for volatility. We did interestingly have yesterday, which was Thursday, it was the first 1% up day in 42 trading days. So we have this 18 VIX, and if you throw out Monday and you throw out yesterday, we don't really have a lot of volatility out there for how expensive VIX is. And that is, again, a little confounding and, makes me wonder, okay, when does the floor fall out? I personally don't think we're going to be able to see a real sell-off, something beyond the 5% that we saw Monday. Monday's low was just over 5% from the top of the market. Anything beyond that is going to be very difficult until we get the VIX back to 13.
13, the heady days of beginning of 2017. We got obviously a lot lower later on in that year. I should not even invoke that year because I shall now usher in the period of no volatility for the next year. Let's get on out. Speaking of volatility and the futures, that's where Matt hangs his hat out there in the land of MIAX. Matt, I've been mentioning on the show here, it seems like almost every week my inbox is lit up with some release or something from you guys that there is yet another new record out there in the Spikes futures. Seems like all the incentive programs you guys have been putting into place over there really starting to pay dividends. What are you seeing from an overall volume perspective out there in the wake of all these programs? And also, you kind of mentioned the shape of your term structure out there on Spikes futures. Any surprises as we saw this weird week unfold, sir?
Yeah, thanks, Mark. It has been a fantastic month in terms of Spikes futures volumes. The average daily volume for the month so far is nearly 8,000 contracts per day. That's about double from what we were doing in August, and what we did in August was about double what we were doing in July. So we've got a nice uptrend going on here. The reason is because we're just welcoming new market participants into our market almost daily. So the liquidity is increasing. Tightness of the bid-ask spread is increasing. Size is increasing. We have average size on the bid-ask spread of about nearly 100 contracts, and the bid-ask width is just a tick wide. So feeling really, really good about how the liquidity is developing, and that's really has important implications for the Spikes options markets because, of course, your options markets are only as liquid as the underlying, and the underlying for the Spikes options markets is indeed the future. So I expect, come next month, our options markets will see improved market quality and likely we'll see improved order flow as well. But getting back to the term structure, the steepness or that spread between the OCC and the NOV contract right now, about 165 when I checked this morning. Historically, that spread this time of year around 90. Steep term structure like that. What that points to is expectations for higher volatility going forward, and that certainly coincides with the sentiment that I heard at the conference of these institutional asset managers looking for downside protection. The demand for downside protection is quite large. So we'll see if that expectation for higher volatility that is implied by that term structure comes to fruition. But it's certainly what the term structure is communicating to us.
Yes, that demand for downside protection is about as deep and as rich as it pretty much has ever been. You look at the futures, you can look at the tail risk into the S&P. We were talking about it on the option block earlier. The skew index pretty much at or around its all-time highs. We were talking about it on TWIFO yesterday, looking at the options over there in the E-mini on the S&P. You're talking about puts that are 30+% bid over the at-the-money vol level. Just, I think the technical term is redonkulous levels of premium for these puts. Now, granted, you're starting from a lower overall vol level out there. So that's why some of that looks a little bit more extreme than it maybe otherwise would be. But still, it's a huge bid out there. We'll get to all that fun stuff in a second. Let's go on out now to the land of VIX futures. And again, we were talking about how even into yesterday, we were pretty much back to unched from a vol perspective, and now they're just coming for it today, listeners. The OC future coming into showtime was down a full point, so they are just smashing the front portion of that curve. It's probably down more now since the start of the show. The no future was down over half a point, about 2/3 of a point, so they are smacking it. Mr. Mark, any intriguing developments out there in the world of the volatility surface this week as you saw the vol come and then the vol go, sir?
Yeah, Monday we briefly went into backwardation, and then like a real one where you had the cash above the October future above November, November above December. That was right at about the point where we turned things around. It was pretty incredible. And then from there, it's just been a complete folding of volatility, and it has just dropped and dropped and dropped. And that is that's been kind of the theme for the week is unwinding the absolute madness that was the trading on Monday.
No, you're right. If you take days like Monday out of the equation, granted, those are the days people who trade products like VIX and spikes live for. That's what you're coming to the table for. That's your equivalent of 21, to use our blackjack parlance from earlier in the week there. So if you take those days out, it does kind of change things a bit from a vol perspective. If you take those out, not a lot of vol to be found in the broad indices out there. Well, let's keep on rolling out to the land of spikes on the options front. You folks come to the show, you like to talk futures, but you come to the dance to trade the options. We know what you're here for, listeners. So let's get out to the land of spikes. Looks like we have pretty much those 2-3 ways still dominating most of the size OI out there in spikes these days. We have the 26-32.5 vertical in October versus the 23 put. And then we also have another vertical versus put, the 23 versus the 30 vertical, again, also in October versus the 17 put. So strikes a little bit different. Intriguing stuff. Usually we see most of the size spikes paper we see seems to be biased towards the upside. Go figure. It's a vol product. That's kind of where people like to play. But I do believe both of those trades are kind of the polar opposite. So interesting stuff afoot out there. Still the three ways dominating the size out there in spikes. Mr. Matt, I know when you're not busy wrangling all the futures over there, you keep an eye on the options. Anything coming across your radar this week, sir?
Yeah, and it's that one of those trades that you just referenced that came on the not this week but last week, where they were essentially a buyer or a seller of the OC 26-32.5 call spread versus buying the 23 put. It was traded 1,400 times, paid $3.45 for it. So the break even on that, it is a bearish vol position. They're looking for spikes to move lower. The break even is around 19.5. So that trade is looking decent right now. Although we do have our expiration is until October 20th. So still got a lot of time there. The amount of time between SEP expiration and OC expiration is relatively long this cycle. So a lot of time in between for this trade to see whether it settles in the money or out.
That's true. We don't talk about the length of the cycle too often, but this one's a bit of a long one. Does it surprise you, Matt, that we're starting to see some trades go up in spikes that tend to be contrary to what we've traditionally seen? I remember even in the earliest days of spikes, it was that 1x2, selling 1, buying 2, obviously looking for a huge upside move. And most of the trades we've seen in spikes, and again, in a lot of the vol products, have been size upside leaning trades. Does it surprise you at all that we're starting to see more of the fading to the downside, or perhaps maybe a sign of the times, Matt, that spikes is getting in line with some of the recent VIX paper and other products we've been seeing?
It is a little bit of a surprise. Typically you see the upside call buying as a means of providing some kind of downside protection, and given the demand that I've been hearing about for downside protection and the limited supply of volatility sellers, it is a little bit of a surprise, but certainly that trade demonstrates that there are willing sellers of vol out there.
They can be found. You may have to look time and again. Day like today, not that hard to find them. They're out there. Let's see what's lighting it up from a VIX options perspective. Been a pretty heady week, as you might imagine. The ADV kicking up to about 467,000. That's a far cry from the below 400K it was not that long ago, a few weeks ago, and up about 26,000 from this time last week. Today, not a ton of paper on the tape, at least comparatively, only 175,000. So it doesn't seem like we're on pace to hit that sizable ADV out there right now. Let's break down some of the top positions. Then we'll go through what we saw lighting it up this week. Cost you 120,000 contracts to break into the top 10 in VIX right now. It gets you to the OCK21 put. Number 9, 132,000 of the OCK19 put. By the way, it is 70-30 puts to calls in the top 10 out there right now. So a little bit more put heavy than we have seen of late. Number 8, 133,000 of the NOV 20s, our first of 3 calls on the list, followed by number 7, our second of 3 calls, 137,000 of my personal favorite, the NOV 60s. They've been lurking in the top 10 for a while, still hanging out this week at number 7. Number 6, $1.44 of the OCK20 puts. Number 5, 166,000 of the NOV 17 puts. Number 4, our third and final call in the top 10, 191,000 of the October 50 calls, 5 O's. Number 3, 197,000 of the OCK18 puts. Number 2, 232,000 of the OCK14 puts. And rounding out the top 10 here in the number 1 spot out there, a respectable 319,000 of the October 17 puts out there. Let's head on out to some of the paper that came across our radar today. Then we'll get the Meatball's thoughts on which trades stood out to him, because there were a few of them this week. Like I said, today, kind of one of the lighter days of the week, only 175,000 contracts on the tape. That said, there are some sizable prints out there today, including the most active contract today, the OCK18 puts, doing 43,000 contracts. So roughly a quarter of all the paper going up today are these OCK18 puts. Number 2, we got the NOV 18 puts, about 28,000 of those. Number 3, 15,000 of the OCK17 puts. You get in a pattern here, listeners. Number 4, 8,900 of the OCK20 puts. And rounding out a pretty light top 5 today, 7,000 of the October 32 halves. Out to yesterday, a little bit more juice out there to be found. 720,000 contracts to be precise. The most active contract, exactly 75,000. You never see that. Exactly 75,000. I'm guessing because this was a pretty outlandish strike. Probably nothing in the book to get in their way. And they have to buy 1 or buy 3 or whatever was lurking there. 75,000 exactly of the March 75s. Very appropriate. 75,000 of those bad boys. Followed by number 2, 63,000 of the OCK17 puts. Number 3, the NOV 60s, our old friend, back in the top 5, almost 61,000. Number 4, OCK18 puts, 58,000. And number 5 yesterday, the NOV 15 puts, almost exactly 50K on the tape there. So obviously a fairly active day, and a lot of it, pretty much half of the paper, in just those top 5 most active contracts. Wednesday, another of the lighter days out there, 383,000 contracts on the tape. We had our big dog on Wednesday was 44,000 of the October 17 puts. Number 2, 31,000 of the OCK20 puts. Number 3, 21,000 of the OCK18 puts. Getting a theme here. Number 4 is interesting. Just a tick under 13,000 of the April 13 puts. So we're starting to get some more of this longer term paper. March upside, April downside, and then rounding out the top 5, speaking of longer term and upside, 12,000 almost exactly of the Feb 70s. I've said it for a long time. February used to be the month where we saw, shall we say, the optimistic, dare I say it, the outlandish paper, the 70s, the par calls, all this weird stuff seemed like it would always go up in the Feb cycle. I never really knew why, but that's where it was. And then, of course, the last few years have intervened and we've seen outlandish trades pretty much any given time of the week. So February has kind of lost some of its luster from that perspective, but getting some back this week with the Feb 70s lighting it up. Tuesday, 576,000 was the number, so a decently active day. The most active contract, again, the OCK17 puts, just tearing it up every day. 60,000 of those going up on Tuesday, followed by number 2, 27,500, the OCK19 puts. Number 3, 25,000 of the OCK20 puts. You see where I'm going, listeners. Number 4, 24,000 of the OCK18 puts. And rounding out the top 5 most active on Tuesday, almost 21,000 of the NOV 19 puts. Monday, let's get to Monday. That's the day probably all of you were waiting for. That was definitely the big dog of the week. The first day with an M handle on it that we've seen in quite some time in the VIX options. 1.04 million contracts to be precise. The most active contract on that day of days, maybe not what you're thinking, 58,000. For a frame of reference, we're seeing similar size today on a much less active day. We're seeing 43,000 of the ACH 18 puts. That's the most active today. On Monday, the most active contract was 58,000 of the ACH 19 puts. Also interesting that it's pretty much the top 5 is almost all puts on a day when we saw vol exploding to the upside. You think you'd see some calls, just people maybe taking them off that they had them on, but not so much. Maybe folks scrambling to get out of the puts. Either way, number one, 58,000 of the ACH 19 puts, followed by number 2, 51,000 of the ACH 20 puts. Number 3, 50,000 almost exactly of the ACH 18 puts. You see where I'm going, listeners. Number 4, 43,000 of the October 17 puts. And got to go all the way down to the bottom of our top 5 listeners to find our first and only call. The ACH 25s, 26, almost 27,000 of those back. I thought for sure, Mr. Meatball, looking at the numbers for Monday, we'd see a litany of calls. That's typically what we see on days when the VIX explodes 8 points to the upside, but not so much. Maybe they were all waiting until the end of the day to get their fade on. I don't know, but what are your thoughts on Monday's paper? Does that surprise you as well? And then B, what else resonated with you on this crazy back and forth week of vol, sir?
Yeah, Monday was interesting because, you'd at least expect them to maybe be taking some calls off.
Somebody had to have a call to sell on Monday. Did nobody?
You would think, but no. And then everybody's stepping in and saying, buy the dip, and digging in on puts. We continue to see October and November puts trade up today. You already mentioned the fact that the ACH 18s are busy and the Nova 18s are busy. I mean, a customer literally bought both at the same time in a trade earlier today. So it is, we've been busy, but it's been very much a put palooza. Today, puts are outpacing calls 3-1 on a very light day. But puts are outpacing calls 3-1. And we continue to see open interest between calls and puts get closer and closer to 1-1.
Outside of the weirdness of just nothing but puts on a day when VIX is exploding. That's the day that this index was designed for. You got to have some calls in your back pocket that someone wanted to sell, but I digress. Apparently the answer is no. But outside of that, Mr. Meatball, any other interesting trades come across your radar throughout the entirety of this week, sir?
There were, I think you mentioned there were a lot of traders buying November and selling further out, higher up to try and finance that. We see that as a trade being executed more and more. Will they buy, November or December or January, between 50 and 60 calls, and then try to go out to March or April and sell the 75 calls to try and put on like a little weird diagonal spread. We've seen that a bunch. I've just been really impressed by the amount of put trading going on and the total lack of interest in calls. I mean, you would have thought the November calls, there's some decent open interest there. The ACH 50s have really decent open interest. There's a lot of them. And, on Monday when we were blowing up, the ACH 50 calls got all the way up to about $1.25, and nobody took any money. And here they are. We're right back to 25 cents. So, I don't know what's going on there, but there was nobody looking to cash in, which I think is, again, weird.
This is just a weird week. I guess the Rock Lobster and I were the only ones looking to unload some upside on Monday. Everybody else was very content. Apparently, they didn't have any. Or if they did, like the ACH 50s, they were content to let them go up and go right back down. What were you up to, listeners, on Monday as we saw the big vol explosion? We've said many times, you usually don't have much time to get the heck out of Dodge. Monday was that rare opportunity where you had most of the day. Did you take advantage of it? Did you get some out? Did you have any to begin with? Did you put some on as the move was going on and then take it off later in the day for tons of profits? What were you up to in this weird week of volatility as we keep on rolling out there into VXY land? Coming into showtime, it had pretty much, again, given up all of its upside. These got up to UVXY got close to 30 and VXX got over 30, I do believe. Let's see, what was the high on the week here for VXX? I do believe got over 30 if I can get my data straight. There we go. Yes, 31.91 was the high there on the week. So bit of a reset in VXX land now coming into showtime. Back at a much more staid 25 and change, about 25.15. Down nearly a full point, about 0.85 from where it was this time last week. So vol giveth and vol taketh away, and it has taken away again. The ADV also ticking up 266,000 contracts on the tape. That's up 27,000 from last show. Also, yet another day where VXX is outpacing VIX. Remember I said not much paper on the VIX tape, about 175,000, 185,000 on the tape right now for VXX. So another day where the tail is wagging the dog. Let's go a quick top 10 here, out here in VXX. Nice to see most of the VXX1 has rolled off the board or been replaced. We have a few left in the top 10, but not many. Number 10, 12,000. By the way, it is 70-30 puts to calls in VXX right now, just to give you some frame of reference. One of those calls is number 10, 12,000 of the DC 30s, followed by number 9, 13,000 of the DC 30 puts. Number 8, just a tick under 14,000 of the NOV 22 puts. Number 7, 15,000 of our first of 2 VXX1 positions, 15,000 of the Jan 3 puts, 3.0 puts. Number 2, 16,000 of the SEP 24 puts. Number 5, our second VXX1 position, 18,000 of the Jan 12 puts. Then back to good old VXX here, 18,500 of the NOV 18 puts. Number 3, 20,000 of the OC 28 calls. Number 2, 27, almost 28,000 of the SEP 54s. And rounding out the top 10 here in VXX, we have 32,500 of the OC 25 puts. So not a lot of SEP left on the board. Really the biggest SEP position that's going out right now in the weeklies are these 54 calls, which will be gone after today. So, and the 24 puts. But outside of that, everything else is longer term, which is interesting. In terms of paper going up out there today, the most active contract is, as you would expect, contracts that are going out today. We have the 11,500 of the SEP 26 calls, followed by 11,000 of the SEP 25 puts, almost 9,000 of the SEP 25 calls, almost 8,000 of the SEP 26 halves, and rounding out the top 5 today, about 7,000 of the SEP 25 halves. Mr. Meatball, anything coming across your radar in VXX land this week, sir?
Yeah, it got really, really busy this week. We saw a ton of traders coming in, buying calls, stepping in, trying to play this thing to drop. The 25 puts today are super active. 11,000 of them traded. They're going for a dime. People trying to wager that, hey, maybe there's another push lower for volatility, but we're going to need the market to probably do better than up a point or down a half a point in order to get that. But there you have it.
It's like we're holding right at that 25 line right now. So it's a pick 'em right now, whether those puts have any juice on them by the end of the day. We shall see. Getting on out to everyone's favorite downside product, UVXY. Coming into showtime, we were at pretty much a 21 even. That puts it down about 1.5 points. Still got around a 21 right now. ADV also ticking up to about 162,000 out there. That's up about 18,000 from this time last week. Not so much with the VXX, though. It's not keeping pace with VIX as closely. Only about 120,000 contracts on the tape today. Still, that's decent paper for UVXY. It'd be a weird market if we saw UVXY regularly outpacing VIX options. That'd be an interesting environment to find ourselves in. Let's just do a top 5 in UVXY because these are smaller positions. Number 5, 8,700 of the Jan 75s. Again, I mentioned about our friend out there who's playing in these 70 strikes, 70s, 75s. There was mostly SEP. Now that SEP's gone away, it looks like maybe he's come back to play in Jan. Maybe that's as far out as he has to go to get that premium because he was getting a surprising amount of juice for those calls, as I recall. And perhaps I shouldn't let that cat out of the bag. That's a fun little secret vol trade. But clearly, someone is back to play and about the same size. As I recall, he was around 9,000 plus. And that's pretty much where he is right now. On the Jan 75s for number 5. Number 4, 9,000 as well of the SEP 21 puts going out today. Number 3, our only UVXY1 in the top 5 now, 9,300 of the Jan 1.0 puts. Number 2, 10,600 of the SEP 22 calls. And number 1 out there, 13,600 of the SEP 20 puts. In terms of what's trading out there today, We have the most active contract, or again, and when I say SEP, all these are going out today, listeners. The SEP 22 calls, 11,700 of those, followed by number 2, 10,000 of the SEP 21s. Number 3, 8,000 of the SEP 21 puts. And again, we're hovering right at that 21 strike right now. So coin flip, which of those will have any meat on the bone by the end of the day. Number 4, 4,500, the AUK 22 calls, and rounding out the top 5 here today, 4,500 as well of the AUK 20 puts. Mr. Meatball, I know you like playing out there in UVXY even more than VXX. What's been lighting up your tape out there, sir?
Yeah, that's another one that's been really busy this week. We saw traders all over it trying to play it up and play it down. It's been day traders all over, everywhere in it. Again, today, super busy. 10,000 of the 21s have already traded, expiring today. 12,000 of the 22s. About 8,000 of the 21 puts expiring today have traded. We've also seen pretty decent activity in regular October, where some of the downside puts are active. They've been buying the 21s, the 20s, and the 18s today. Nothing really going on long dated. It's really all short dated trading.
Makes sense given how UVXY likes to play. Speaking of play, I know a lot of you like to play in the single names, and we still have some earnings vol popping off. Again, you guys can check out these reports for yourselves, freshly updated, theoptionsinsider.com. Click on the options news and articles tab. You're off to the races there. All these latest earnings move results, and earnings season reports, courtesy of Matt and his team over there at Orats. We had some interesting names popping off this week. Leonard Holmes, Cracker Barrel on Leonard Holmes is Monday, Cracker Barrel and FedEx on Tuesday, General Mills and KB Home on Wednesday, and Mr. Meatball, your favorite Darden restaurants, followed by Rite Aid, Nike, and Costco yesterday. Mr. Meatball, how excited / disgusted were you to see Darden restaurants rally, almost 13 handles yesterday? Clearly, sir, clearly you are the only one talking smack about the delicious breadsticks and unlimited salad at Olive Garden, sir.
Yeah, I mean, I didn't realize salad and breadsticks could do that well, because it's certainly not the regular Italian food, which is absolute garbage. You know what this makes me want to do is buy stock in Chef Boyardee, because clearly people love bad Italian food, and so I will be all over that one.
Good old Chef Boyardee. The man makes a mean spaghetti-o. Do not mock him. All right, let's go on out to looking at some of these reports. Like I said, Darden restaurants kind of blown the doors off. It was kind of one of the few big ones to really not to cover up the ball this week. They were pricing in, 4.6%, and they were at 150, pretty much even going into their announcement. And they initial blush, that's how the Orats team measures it. Right after the announcement, they had only moved about 4.8%, but obviously that was just the beginning of the move. If you expand that, like I mentioned, they rallied $13 so at one point at their high. So that was nearly 3x what they had priced in for that straddle. And then it had settled off now around 159.5. That's up almost $9.50 from where it was at the straddle. So still almost 2x what they were pricing in. So again, it's a bit of a frame of reference issue. If you hold these long enough, you might be able to get the move. And certainly that was the case in Darden restaurants. Rite Aid and KB Homes were not really the ones to deliver a lot of juice. In fact, they were pretty much in line with what we've been seeing out there for most of the pandemic earnings cycles. Rite Aid was pricing in 11.6%. They went into their announcement at 15.25. They delivered about 8%, so underperforming. And looks like they have moved even less since then. So if you waited, it got even worse from a premium buyer perspective. KB Homes, they were priced. They were at about almost $41 going into their announcement. They were pricing in 5.1%, and they delivered a whopping 2.6%. So those are more along the lines of what we expect now from the pandemic-related earnings, listeners. And looks like coming into today's show, they have expanded a little bit. They're down to 41.5. So they've moved about 3%, but still nowhere near enough to make up for that 5% straddle. That's kind of been the order of the day. We're holding firm at about an 86% right now in the earnings season report, which is much better than we have seen throughout most of the pandemic. We're looking in the 50s and 60s and maybe a few flirting with the 70s, but 86% is pretty good. So we'll take it, but still not quite the earnings bonanza that some perhaps were hoping for. We had a couple other names popping off here. Let's look really quickly, see if I can find some. I know Costco talking about how they've had their best growth in 20 years. Sounds like they're starting to hoard and ration toilet paper again, which is maybe not a good sign for the global society as a whole. But Costco went into their announcements yesterday after the bell. They were at $4.52 1/3. They were pricing in about $11, actually about $10.60. And in the past, they've moved about $11. And let's see. And by today, they're up 14 points or 3.16%. And they have moved looks like about $15 from where they were going into their announcement. So again, they priced in about $10.50. If you waited long enough, you got about $15 out of it. So Costco outperforming. I did hear Nike as well. They were popping off earlier here after the bell, I should say, last night. And they were one, I know they've been limited by some of the supply issues coming out of Vietnam where a lot of their stuff is produced. So let's see. They were pricing in, they went into the announcement, 157 and about a half. In the past, they've moved 9 1/4. They were pricing in even less, 831. And it looks like they moved about almost $10, 994 to the dark side. So a little bit more outperformance, pretty much close to in line with their straddle, a little bit outperformance. So we'll take what we can get out here. And let's look really quickly. This one kind of surprised me that it was back on our earnings docket. Oh, this is for next week. We'll get to Bed Bath & Beyond. For next week, we'll save it. It's time now to keep on rolling into your portion of the show. It is time to open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Crystal Ball. You guys ask us questions. We often turn the spotlight back on you like we did this week. We asked you at the start of the week, right when all the madness was hot and heavy, we said, hey, VIX is popping. Markets were firmly in the red. Is this just a blip? Or this might have more teeth to it? We wanted a stealth way to get you to play along with us here in the Crystal Ball. We asked you quite simply, where will VIX close at the end of the week? We made it easy for you, though. You don't have to guess precisely like we do here on the show. We gave you 4 ranges. We gave you very elevated, so north of 26, which is where we were hanging out when we posted this. Elevated, so the 23 to about 26 range. Frothy, so about the 20 to about 23 range. Or bubbling, as we put it, which is below 20. And this one pretty much played out almost like we thought. Earlier in the voting, it was very heavy around the very elevated, as you might imagine, and had a little bit of love for frothy, which was about the 20 to 23 range. Throughout the entirety of the voting, there wasn't much love for the 23 to 26 range, which to me was weird because that was one notch below where we were trading. Yet people thought, I guess we would just blow through that, and it seems like they were right. We did. And right now, to end the week, as you might expect, bubbling has gotten a little bit more love, which is below 20. But actually, interesting, I'm looking at it right now, the numbers have changed a little bit during showtime because we now have a tie with exactly 30% each for bubbling, which is below 20, and frothy for 20 to 23%. So some folks thinking maybe we may have a bit of a turn towards the end of the session and get some vol back in and get VIX above 20 again. We shall see. And then elevated, or I should say very elevated, was at 24.3%. And then rounding out the top 5 for this week is 15.7%. There still is a little time left to vote if you want to, but it ends pretty much here with the end of the week. So I think we kind of know where we're hanging out, unless barring some surprises. A lot of people chimed in with their thoughts. I just like this guy's handle, Age of Del Aquarius. He says, I went with frothy, bought back my short VXX puts today, but my red alert siren is still unplugged and gathering dust. Interesting. So I'm guessing Monday's pop didn't set off his red alert siren here. Speaking of big moves and how to capture them, interesting question here from Curtis. He says, hey guys, love the show and all the great content on the Options Insider Radio Network. Well, right back at you, Curtis. We love all of you listeners, new, old, all of you who've been with us on this ride. We love you all. He says, I've been learning about butterflies and trying them out a bit in products like VIX, but I'm having a hard time trading them effectively. It seems like when I get the move I want, like the week, like I think he means this week's, like this week's pop in VIX, all of the legs of my trade increase, so I can't really take off the butterfly for any real profit. Do you guys trade using butterflies? If so, what are some of the things you've noticed to make them more profitable? Because it seems like just waiting for the underlying to close at your short strike doesn't really seem to work. No, that is a difficult way to proceed with trading butterflies there, Chris. You have that one little bullseye. And if you want it to just hit that and close at that, your chances are pretty low of that. Mr. Meatball, though, an intriguing question. A lot of our listeners take this approach because trading whatever it is, puts or calls in VIX, can get prohibitively expensive if you just buy them. And even if you do spreads, it's still pretty pricey. So they start to do the multi-leg, selling too. That's where they start getting into the butterflies. But then they typically encounter what Curtis is encountering. So what are your thoughts here for folks who want to try to trade some flies in VIX or spikes or whatever?
Yeah, I mean, I use VIX butterflies all the time. And I use bearish butterflies in names like UVXY and VXX as well. I'm a big proponent. You get that really juicy premium way out of the money. So, at the peak of the vol spike on Monday, you could put on the 25, 50, 75 fly, and it costs less than about $2. That was great risk reward. So I'm all in favor of using spreads and flies to try and make up for it.
You're talking about much wider, it sounds like.
Yes.
I'm assuming Curtis is talking about, like, say, a few strikes. You're talking about 25 handles at a clip.
Yeah, so tight strikes aren't going to work very well because the movement correlates so well that when vol blows up that you're not going to make a ton of money. You need to use kind of wider action, pay a little more in order to get the benefit of the volatility spikes when they happen. On the downside, you can do things a lot tighter because volatility tends to actually drop in VIX as VIX drops, and that will actually work to your favor. But upside, you can't do tight flies. They just don't pay.
I think that's good advice. Really quickly here before we get on to the crystal ball. We talked about this a couple of weeks ago. That's when it came in, but I want to give you a chance since you are referenced in it, Mark, to give you your thoughts on this. This is from John Kwan. He says, hello, I've been listening to Vol Views and the Option Block, and I keep hearing snippets about Mark's Gamma Radar. He puts in parentheses, Gamdar. I've been reading about Gamma hedging, GEX, flip points, etc. for the past few weeks. I wonder if there's a resource to read about how Mark uses Gamma, or can this be explained further? He also asks about market maker hedge. I don't know if we have time to get into all that latter part, but since he's asking about your Gamdar, sir, what do you have to say for him?
My Gamdar, my Gamma Radar.
That's the new name, by the way, the Gamdar. I like that.
The Gamdar, I love it. It really does help me spot movers. We were in on LCID. We were now in Ford. So it pulls up some really interesting names and can help really identify stuff that is moving out of whack because the options are way out of control.
There you go. Check out the Gamdar if you are intrigued. What was it? John Kwan and anybody else. And really quickly before we roll out of this one, I just have to mention this one came right before showtime. Our friend of the show, Jim Carroll, tweeted out a graph at us. He had a graph of VIX versus S&P and saying, looking at just the relative levels of the two and asking just a simple question, is it safe? Meaning, is it safe to kind of dive back in? So I jokingly replied to him, yeah, the water's fine. Dive on in. What's the worst that could happen? And he replied, this is why I wanted to feature. He replied, says, you get stopped out and you do it all over again. But he included, because he knows who he's tweeting with, he included, Mr. Meatball, a gif of Stone Cold Steve Austin storming into the ring. And against the VIX comment, it doesn't really make sense. But when he's sending it to us, sir, on the show, we appreciate a good Stone Cold gif, sir.
I like Mr. Carroll, even though he's from New York. I like him. And yes, who doesn't love Stone Cold Steve Austin?
Yes. Anytime you want to send us some fun wrestling-related gifs and images, listeners, we are all about it. We have a whole segment on Monday's show just for that. As we keep on rolling into that most difficult segment, maybe Stone Cold can help us this week. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the crystal ball. This was a tough one this week, as I think a lot of you discovered playing along. Love to see so many of you playing along with our game. It makes it fun, and hey, it doesn't cost you anything. And maybe if you hit a bullseye, you can win some fabulous prizes. Of course, our chat, like Nichols in our live chat saying, this week is an outlier. It doesn't count. Yeah, I think we can all maybe take that one on this, even though I was looking pretty good. And Brian was actually looking pretty good as well, right up until I wasn't. That's always the case. I was pricing in a little bit more juice than we had at the time of the show last week, listeners. I was at an 1876, an interesting year, and also an interesting vol prediction. Coming into showtime, we have VIX just shy of the 18 handle, about 1795. Spikes is actually at a little higher, at about an 1831. So I hate to say it, but from a Spikes perspective, Brian was at a freaking bullseye. He was at 1830. My goodness. So I'm going to give it to him. Winner, chicken dinner. He's 0.01 away on Spikes. I was 0.45 away. So that's not bad, given where we have been of late and given how much vol moved this week, listeners. I'll take that as a moral victory, but not quite within our frame of reference for victory. Mr. Meatball was at a 1701. So no joy for him either there. And then you guys were all over the map. I was looking at a couple of these. Unlimited was at 17.5. That's not bad. It's about a point away on Spikes. At VIX, he was 17.33. You're a little closer on VIX than you are on Spikes. He had a VVIX as well, 109. I think you're pretty darn close on that one. So maybe I'll give you the VVIX. Options Queen was higher than she anticipated our hopes. She wanted 21.25. Well, we got there, and then it went away. Luigi was 19.05. JJ 17.5. That's 17.42. That's not looking bad, JJ. Wentworth 16.08. Adam 17.56. Again, close but no cigar for a lot of you. Blips, let's see new names in there too. Blips 21.04. Allen 20.56. Henry 22 and change. Looks like nobody else. Mackenzie 19. Nichols 18.60. Not bad, Nichols. You were close. Kind of almost carping me there a little bit, but I'll forgive you because you're one of our regulars in the pro chat there. But yeah, a lot of you were all over the place, which kind of speaks to what this week was. I don't see any other winner chicken dinner outside of Mr. Unlimited. It's a pretty nice VVIX prognostication. I'll tip my cap to you. We don't ask for that. That's just a bonus, but a fun one nonetheless. So all that a long way around. Brian's not here to celebrate his victory. I'll have to tweet him after the show and let him know that he is our winner chicken dinner. That means, Mr. Matt, you get the pride of place in our kind of guest hot seat. What are you feeling for Spikes this time next week, sir?
I'm going to predict. I like to be a little bit of a contrarian, and we talked a lot about today about unusual amount of put trading in VIX options and Spikes options, and I think it is kind of unusual given especially in the wake of the Fed. The Fed didn't indicate that they're going to be terribly accommodative, but the flows seems like the market expects the Fed to continue to be accommodative. So I'm going to go against those flows and look for a higher Spikes index at 21.5.
Ooh, 21.5, says Mr. Matt. Interesting. And then I do believe, I was the next closest. So I shall go next. I will leave it to the Meatball to go. I'll be nice. I'll be that kind of guy. All right, let's see. So he's fading to the upside here. It's one of those weird weeks where we have Powell maybe talking about tapering and the market's like, we don't care. We don't care what's going on about this stuff. Let's just crush the vol. So yeah, one of those weird weeks, listeners. I'm with you though. I don't know if we're going to see we could flip obviously lower, could get a 17, maybe even flirt with a 16 handle this week. But I do think we'll end up not that far back from where we are. I'm going to go back to about an 18 double. So ever so slightly, even though if we do see your upside come to pass, Mr. Matt, I would not be terribly surprised either. It is one of those weird weeks. All right, Mr. Meatball, you could drive a truck through this. 21.5 on the upside, 18 double on the dark side. What are you feeling, sir?
All right. So I got to bet against my book, don't I? I'm going to say 21-21.
Oh, coming in. Carping Matt a little bit, betting your book there. All right, 21-21, not quite splitting the uprights, more like kind of elbowing Matt aside like we used to do out there in the pits there and say, hey, I'll be here, I'll be better. So 21.5 to 21-21 for the Meatball and 18.55 for the actual precise prognostication, which is, of course, mine. All right, listeners, that music means we've come to the end of at least this leg of our double-legged, double-pronged options journey today. If you're in our secret club, hang out, have fun. We'll be back in a little less than an hour now, 55 minutes, to break down the entirety of the week, an unusual activity out there on Options Oddities. So stay tuned for that. Don't want to miss it. If you don't know what I'm talking about, theoptionsinsider.com/pro is the place to go to learn more. And Mr. Matt, if folks are intrigued, they want to learn more about the MIAX, the futures incentive programs, or about the spikes options, or anything spikes, where should they go? What should they do, sir?
They should go to MIAXoptions.com. Under products, you'll find a section that's on spikes, and it's got tons of information for you.
There you go. MIAXoptions.com/spikes is the place to go to learn more. You get data, you get the releases. You can see all the stuff I'm talking about with the futures records pretty much every week. You can get a link to a cool show called Volatility Views. What more could you possibly ask for from a volatility-oriented destination? MIAXoptions.com/spikes is the place to go. Mr. Meatball, if folks have questions about the GAMDAR and everything else, like our listeners did today, where should they go? What should they do?
Yeah, go to optionpit.com and make sure you're registered for all of our free newsletters and all of the information that we put out on a daily basis. I think that you will find it to be extremely valuable. Go to optionpit.com, sign up for that VIX Edge newsletter.
There you go, optionpit.com. Sign up for the newsletter. Speaking of valuable, looking at all the prognostications coming in hot and heavy in our live chat. You folks are interesting and all over the place. 22.25, 19.5, 18 even. Man, we got quite the range. 18.5. No, 16.5. Excuse me. So all over the place, which again, it's one of those weeks, listeners, where we could easily touch all of those levels. You want to join a secret club? Again, you know where to go, theoptionsinsider.com/pro. We'll see you back here in a little less than an hour now for Options Oddities, and then back again next week for all of our programming all the way through to another Friday, another episode of Volatility Views. We'll see you then.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.